Yesterday we have discussed the death estate, and the concept in the death estate, you can get the nil rate band, residence nil rate band at the time of death. That is, in death estate, if you transfer the house to your children and grandchildren in the death estate, then you will get the residence nil rate band along with normal nil rate band, right? So residence, I already told you, residence nil rate band is available when you transfer the house, to your children and grandchildren, right? Then on death, it means on death estate, it is available only on death estate, not at the PAT and CLT. When you calculate the death tax on PAT and CLT, it is not available. It is only available when you transfer the house in death estate to your children and grandchildren. Then 1,25,000 residence nil rate band is available. Okay. Okay. And it will be added in the 3,25,000 nil rate band. So band will be increased. For example, your house value is, you can say 2 lakh house value, and you are paying a mortgage on it, for example 1 lakh. So what is the remaining value of the house? 1 lakh.
1 lakh.
So how much residence nil rate band available on this house?
1 lakh.
1 lakh. So 1,20,000 will be reduced to the value of the house. Okay. Not 1,25,000. Any problem?
Okay, ma'am.
So, for example, in your lifetime, you are giving the house to your children or grandchildren. Children or grandchildren. That is a pet. This gift is called pet. Lifetime gift. And if this person is died within 7 years of this gift, this pet becomes chargeable at the time of death, right? But when you calculate the death tax on this pet, residence nil rate band available or not?
Not available.
Not available, because only when you in death estate, when you transfer the house to your children, that is available. When you calculate the death tax on the lifetime gift, it is not available at the time of death. Done? Okay, next concept is diminution in value rule. Diminution in value says IHT will be charged on the decrease in wealth of donor, not on the wealth received by donee. Means you will charge the IHT on the donor's point of view. How? You can see the formula below. Value of wealth of donor before gift minus value of wealth of donor after gift. Then decrease or diminution in value, or it is also called value of transfer, you will get. For example, I will give you an example here. That is a rule, but behind this rule, a person is making a fraud. Firstly, I will tell you the fraud. To overcome this fraud, the diminution in value rule come. Okay. So firstly, what is the fraud behind this rule? For example, a person, Mr. A, has 5 vases, set of 5 vases, set, right? And the combined value of this set is, for example, you can say 8 lakh. 8 lakh. And one vase separate value is, for example, 1 lakh. If you will gift me 5 vases set together, how much tax you will pay?
5 buses together. 40%.
No.
Sorry.
On how much value?
Okay, 5 buses, 8 lakhs.
8 lakhs. But if you are gifting me 1 vase today, how much value you are paying the tax?
1 lakhs.
1 lakh. And then tomorrow you are giving me another second vase. Then 1 lakh
1
again.
lakh.
And third vase, then 1 lakh, fourth 1 lakh, 5 1 lakh. Total how much tax you are paying if you gifting me separate vases? One by one.
For a 1 by 1.
If you are gifting me vases one by one, how much value you are paying the tax?
Okay. 1 by 1. 1 lakhs, 1 lakhs. From which we can
Total.
deduct. Total 8 lakhs.
8 lakhs.
No, you are giving me 1 vase. 1 lakh you are paying.
1 lakh.
1 lakh value you are paying the tax. Then you are giving me
Yes.
second. Then another 1 lakh, on 1 lakh value you are paying the tax. Then another third, fourth, fifth. How much total on value you are paying the tax?
1 lakh per basis. Total, if
Total
we give
5 vases. So how much tax you are paying on value?
5 lakhs.
5 lakhs. If you give me set of 5 vases together, 8 lakh is the value of set. But if you will gift me one by one, only 5 lakh you are paying the tax. How much tax you are saving?
On 3 lakhs.
3 lakh. And that is a fraud. You are making a fraud instead of gifting, because you are gifting me all the vases one by one. Why not full? Because full value is high. So that's why you are saving the tax by gifting me one by one. And tax department will never bear these gifts, because they will say, if you gift all the vases, why not together? Why you are decreasing the value, right? So then this fraud will overcome by the diminution in value concept.
Okay.
Examiner will ask you same data, and then you will say that that is a diminution in value rule. Examiner will give you set of some things, and the set value is high, and you are gifting one by one, then diminution in value rule come, right? So set value is given in the exam, and you are gifting one by one. How examiner will test this rule? Just write down a question. Mr. A owns 5 vases having value of 600,000. So 5 vases value is 6 lakh. Now Mr. A gifted 1 vase to his son having value of 50,000 pound. What is this?
PAT.
Yes, PET.
Yes.
Compute the requirement is compute the value of PET. And which rule will apply to see the data and tell me through which rule you will calculate the value of PET?
Diminution value.
Diminution. Why? Because set value information is given and you are gifting one vase, right? So now you are Mr. A donor. Tell me value before gift. You are gifting me vase 1 to your son. That is a PET.
Value before gift is 6 lakhs.
Before gifting vase number 1 to your son, tell me how many vases you have before gift.
5
5
lakhs.
And 5 vases have value of 8 lakh, right?
6
Now
lakhs.
you
6 lakhs. 6 lakhs.
6 lakhs. Now you gift me vase number 1. So how many vases left after gift?
4.
4. One vase has a value of 50,000. So 4 has value 2 lakhs. Right? What is the diminution or decrease in value? Diminution in value, or you can say value of transfer. 4 lakhs. So, now tell me, when you find out the value of transfer, what is the next step?
Annual exemption.
Yes, you will deduct the annual exemption of current year and previous year, and then you will get the value of PAT.
Okay.
Okay. Okay. Next. Next is related party holding concept. Related party means exempt parties. And you know in IHT which parties are exempt? Spouses,
Spoilers.
charity, political
Yes.
party, and national
Political party, national
body.
body.
So related party concept applies when you gifting the same information, set information is given, set information value is high, and you are gifting one asset out of that whole set and value is low. But before that, you are gifting one set of one asset, gifting to related party, exempt party, means spouse, charity, political party, and national body. And then, secondly, you are gifting to any chargeable party. Then, related party concept applies, right? For example, in the same scenario, Mr. A has 5 vases, right?
Right.
5 vases set, and set value is 8 lakh. Now his intention of, and one vase value for example is 50,000. Now his intention is to give all the vases to his son, but he will gift the, for example, one vase number 1 to his wife, or maybe charity, means related party, exempt party. When you gift the vase to wife, there is no IHT exempt, right? And now you are
Right.
giving it to your son. Tax, you have to pay the tax. When you gift vase number 1 to your wife,
Exempt.
tell me, when you give vase number 1 to wife, so value before gift, how many vases you have before the gift?
Right.
4.
For all vases you have before gift, right?
Right.
So 8 lakh combined value. Now vase number 1 you gifted it to your wife. So what is the value after gift?
750,000.
50,000 is one vase value, and you have 4 vases left. So 2 lakhs,
Okay. 2 lakhs.
not 7 lakh. So what is diminution in value? Decrease in value, 6 lakh. And it is exempt because you are gifting to wife, right? Now other 4 vases you are gifting to your son one by one. How? Vase number 2, for example, you are gifting to your son, right? Now tell me, before gifting the second vase to your son, how many vases you have before gift?
4%.
4.
4.
4 vases has value 2 lakhs. Now less. How 2 lakhs? 50,000 is per vase value and 4 total is 2 lakhs. Now you gift second vase to your son. How many vases you have after gift?
3%.
3. 3 means 1,50,000 value.
Yes.
So decrease in value is 50,000 and you have to pay IHT on it. And same vase 3, 4, 5 you are gifting and same 50,000 rise. It means total 2 lakhs. 50, 50, 50 and 50. 2 lakhs. On 2 lakhs you are paying the IHT, right? And how much you can exempt? 6 lakhs, right? Can you got my point? Last number 1 you are gifting to your wife and 6 lakh you can exempt because wife is a exempt party. Okay.
Yes.
And remaining 4 vases you are gifting to your son and total decrease in value 50,000 rise. It means on 2 lakhs you are paying the IHT, right?
Yes.
So 6 lakh is exempt and only 2 lakhs is chargeable. Out, you have to pay the tax on 8 lakhs, but when you give to your spouse, related party, exempt party, or a charity, anything, any related party. So it means 6 lakh is exempt and only 2 lakh is chargeable. But tax department will never bear such thing, right? They will introduce the same rule, which is related party holding concept. Related party concept means exempt parties. Same scenario examiner will give you means one out of the asset you are giving to one of the asset to your spouse, charity, national political party, national institution, any related party. And then the remaining asset you are giving to the other chargeable parties. Then related party rule will apply. According to this rule, how to calculate the value before and after gift? A divided by A plus B into combined value. A mean donor's wealth. Donor is who is gifting the asset. And B is related party wealth. Related party mean spouse, charity, political party, national institution, right?
Right.
Exempt party wealth. And combined value mean A plus B combined value is given in the exam. So how examiner will test this concept in the exam? I will send you a question and we can do it. Give me a minute. Okay. Have you received the question?
Yes.
Yes.
Question same. For example, the question is shares in an unquoted company. Husband 4,000, wife 2,000, son 700. Shares gifted to UK charity under exempt party rule 3250 shares, which were disposed by charity 2 years ago. And combined values of the shares are given. Number of shares, price per share given, and total value of the share is also given, right? Requirement A. If husband gifted, just correct the first requirement, that is wrong. If husband gifted 4,000 shares to his daughter, make it 2,000 share to his daughter, not 4,000. So correct the requirement A, if husband gifted 4,000 shares to his daughter, right? And B requirement is wrong. We are not attempting the B requirement, only A requirement we are attempting. So if you are giving 2,000 shares to your daughter, it is a pet.
Yes.
And
Yes.
requirement is compute the value of pet. You know, you are gifting the 2,000 shares to daughter. You are a donor. Husband is a donor because he is gifting to daughter. Who is related party then in the question? Exempt party.
Wife.
Wife.
Wife
Charity
and
is
son.
also exempt party, right? Wife, spouse, charity, political party, national institution. 4 are related parties, and you are donor, right? So, and related party names are given, and also the combined value table, just like that. Shares values table is given in the exam table, and spouse charity names are given in the exam. Then the related party rule will apply in the question. So, how to compute the value of the pet? That means you are gifting husband is gifting 2,000 shares to daughter. That is a pet, lifetime gift. How to calculate the value of transfer of this pet? Value of transfer is calculated using the related party rule. Related party rule says value before gift and after gift will be calculated through A divided by A plus B into combined value formula. So value before gift. You are gifting 2,000 shares to your daughter. Before gift, how many shares you have? Number of shares.
I have 4,000 shares.
Yes, you mean husband. 4,000 A wealth mean donor's wealth before gift divided by 4,000 plus related party wealth. B mean related party wealth. In this question, related party is wife and charity. Wife has 2,000 shares.
Yes.
Plus
Yes.
charity has 3,250 shares. Why you are writing here the charity? Because charity sell the share 2 years ago. Why we are writing here? Because the rule says if related party has the asset in last 5 years, anytime, you are selling it for 2 years ago. But in last 5 years, if you have these asset, then you can write
Yes.
it, right? So because 3,250 as it is in last 5 years, that's why you are writing here into combined value. So tell me in the denominator figure how many number of shares you have? 4 plus 2 plus 3,250. Tell me the number of shares total. 4,000 plus 2,000 plus 3,250.
9,250.
Tell me combined value is given in the table. 9,250 shares value. Total number of
23,100.
yes
23,150.
yes into 23,125 is equal to 10,000 pound. And now value after gift. You are gifting 2,000 shares to your daughter. So after gift, how many number of shares you have left?
2,000.
2,000 divided by 2,000 plus related parties. Still related parties still have these shares. Why 2,000 plus 3,250 charity into combined value. Now tell me in denominator how many number of shares you have? 2 plus 3,250.
7,250.
What is the value of 7,250 shares total?
7,250. 14,500.
Is equal to 4,000. So decrease in value or value of transfer you can say is 6,000. And if you want the value of pet, what is the next step after value of transfer?
You have
Analyze it.
to deduct another thing.
The last step is from value of transfer, you have to deduct the annual exemption of current year and previous year, then you will get the value of pet or CLT. Done? That topic is also completed. Now the next topic is business property relief. Very important topic. Another important. All these topics are important. Business property relief, BPR, when this relief is available. Four things if you will gift, then BPR available. Which four things when you gift? Number one, when you give the unincorporated business, means sole trader partnership business, when you gift, then 100% BPR available. Percentage is given in the next column. Second, if you gift the unquoted shares, 100% BPR available. Third, if you gift quoted shares, in which donor has at least 51% control in the company, at least 51% plus holding you have, then on gifting the quoted share, you will get the 50% BPR, right? And fourth, when you give the personal asset, which is used in the business, then 50% BPR available. So four things when you gift, which things? Unincorporated business, next unquoted shares, next, tell me.
Quoted share.
In which the at least you have control in the company, 50% plus shares, then 50% BPR. And last,
Personal asset which is used in business.
so it means business assets, right?
Yes.
Right.
Okay. So when you give these four things, you will get the business property relief. And you know, we already discussed in the gift relief. When you gift all these things, you also get the gift relief. Same things. In the CGT gift relief available when you gift the unincorporated business, unquoted share, quoted shares, right? Same things. If you knew the conditions of BPR, gift relief, same conditions of gift relief and BPR. In IHT, when you gift these things, BPR available. In CGT, gift relief available on gifting these things, right?
Right.
Okay, next line. BPR is available for both lifetime gifts and on the death gift. Means when you gift all these four things in during lifetime, PET CLT, BPR available. Or when you gift these four things in the at the time of death, in death estate, BPR available. So on lifetime gift and death estate both, you can get the BPR if you gift these four things, right? BPR is a relief. When tax department will give you the relief, then tax department impose conditions.
Some condition.
Condition is, there is one condition. Condition is ownership period of at least 2 years required. Before gifting the unincorporated business, unquoted shares, quoted shares, personal asset which is used in the business, then 2-year ownership is required. Clear? If you have less than 2-year ownership period, then no BPR available. Next line. Spouse can use each other's ownership period to make it total 2-year ownership period in the whole IHT. Means, for example, I'm giving you an example. Father is gifting his business to son. And father, it is a pet, normal lifetime gift, son, individual. And father has 2-year ownership. Now tell me, can father get the BPR or not on this pet?
Yes.
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 Second example. Husband is gifting business to his wife. IHT applicable or exempt?
Applicable.
Why? Spouse, when spouse give to each other, IHT is exempt.
Exempt.
Yeah. Okay, exempt.
Why
Have to
applicable?
see. Okay. No.
For example, husband ownership is 1.5 years. And wife, same business, wife will gift it to his son. And she has 6 month, 0.6 year means 6 month ownership, and then she will gift it to his son. It is a pet. Now tell me whether when wife give the business to his son, gift it, whether wife can get the BPR or not.
BPR eligible.
Can
Why?
can
Because
get BPO.
he has only
Combined
6
period.
months. But when spouse's ownership period is combined, she has to.
Yes, combined period of ownership is 2 years.
She has 6 month ownership, but when she combined the ownership period of his husband, spouse, then she has 2 year ownership. So when she gives the business to his son, against this pet, she can get the BPR. Done? Any problem?
No.
Next. Withdrawal of BPR. For example, I'm giving you an example here. For example, father gifted his business to son, and the business worth is 500,000. And now father died. This gift is made in 1st January 2007. That is a pet gifted. And now father died in 20th February 2009. Death date of father. Okay. So make the timeline. You are making the gift on 1 January 07. That is a pet. Okay. And now calculate the value of pet. So give to son. That is a pet. Tax year 0607, January 7 means. Value of transfer. Tell me the value of transfer.
5 lakh.
5 lakh. Now less BPR. BPR is available. How much when you give the business? How much BPR? 100%. So
Yes.
5 lakh BPR available. So value of transfer is 0, right? It means IHT 0. There is no value remains. Okay.
Okay.
So when you calculate the death tax against this pet, there is no death tax because value is 0. Pet value is 0. Any problem?
No.
Another example. Hello? Hello.
Hello.
Okay. Mr. J is gifting shares of quoted company value 689,285 pound. He has 2-year ownership of these shares and 55% holding in the company. So conditions of BP are met.
Yes, 50%.
Plus 2-year ownership. And the date of gift is on May 2010, and he died in January 11. Calculate value of pet. Okay, now make the timeline. In May 2010 you are making the gift pet, so first give lifetime tax we are calculating on this lifetime gift. So gift to son, it is a pet, tax year 1011, and what is the value of transfer?
689,285.
285. Now deduct the BPR because BPR condition is met. How much on quoted share? 50% BPR available. 344,643. So the remaining value of transfer is 344,643. Now deduct the annual exemption of current year 3,000 and previous year 3,000. So PAT value is 338,642, right? Now he died in January 11. January 11, that date. When you go back 7 years from the death date, is this PAT is chargeable on death? It is in 7 years of death, last 7 years.
Yes.
Yes. So PAT become chargeable at death date. So he died, death date is January 11, tax year 1011, and we are paying the tax on the value of PAT. PAT value is May 10 is gift date and 338,642 is the value on which you will pay the death tax. Before paying the death tax, you have to check NRB availability at death date because you are paying the death tax. 1011 is the death year. 325,000 less last 7 years chargeable transfer. Always go back 7 years from the gift date on which you are paying the tax. Today gift date is May 10 on which you are paying the tax. Go to the timeline and from May 10 go back 7 years. Whether you can see any chargeable transfer in the question?
No.
No. So available NRB is full, 25,000. Now on value of PAT 338,642, out of which 325,000 cover in the nil rate band, zero tax, and the remaining amount what is the remaining amount?
$13,640.
640
43 or 42.
into what is the